Let's talk business. Markets gained the most in 2 weeks today. Nifty rose to nearly 19,700 level, whereas Sensex was shut shop at 66,000. Realty, metal, banks and auto sectors led the gains. Alex Matthew with the wrap of all the market action.
Well, Indian equity markets shrugged off global geopolitical concerns to gain in trade today. You saw the Nifty 50 gain about 0.9% to end just shy of that 19,700 mark, and the broader markets in fact outperformed, with both the mid-cap and the small-cap index gaining over 1% each. Now, overnight you saw US bond yields declined quite sharply because of dovish comments by a Federal Reserve official that seemed to suggest that perhaps that rate hike that everyone thinks is on the cards may not actually come to pass, as a result of which you saw a risk-on sentiment in quite a few global equity markets, and the Indian equity markets was no exception to that. Most of the sectoral indices gained ground today, but they were led by the Realty index, which hit a 52-week high and gained at one point of time over 4%. They ended at, or it ended at very close to 4% higher for the day. And that was on account of quite a few positive Q2 updates, business updates. We'll get to that in just a bit. The Nifty Bank also gained over 1%, and the PSU Banking Index saw quite a bit of strength, gaining over 2% in trade. The top gainers on the Nifty 50 then, you had Coal India, which was by far and away the top gainer, up over 5% in trade. Adani Ports recouped some of the losses from yesterday. Bharti Airtel, Kotak Mahindra Bank and Adani Enterprises were the other top gainers. Few of the losers, only about 5 or 6 of them, but they were the likes of IndusInd Bank as well as Cipla, TCS ahead of its results, and Dr. Reddy's Laboratories and Asian Paints, which ended more or less flat. Now, some of those realty names that I mentioned, Ajmera Realty, for example, gained about 18% in trade after sales value rose over 50% in the second quarter. Similar results by Puravankara as well, which reported an over 100% rise in sales value. JSW Steel gained over 2% at one point, but ended below that mark with volume growth of 12% in the second quarter. And then quite a few stocks gained on the back of order wins. Genus Power was one of them, gaining about 5%. And then finally, ahead of tomorrow, all eyes are going to be on the IT pack with TCS results out after market hours tomorrow.
Thanks for all the updates, Alex. The Indian pharma market has seen a slowdown in growth in September with a reported fall in volumes. This is the 5th consecutive month that the sector has posted low single-digit growth. Is the pharma sector set for a revival? Prime Securities' N. Jayakumar shares his insights.
For the first time in the commentary in the last few quarters, we've seen drug shortages in various parts of the US and multiple drugs. There's a recent report by one of the bulge bracket brokerages which talks about 302 or 306 drugs in short supply. And I am, for instance, aware of the fact that the US FDA has actually called up different companies and talked about shortages which if some of the Indian companies can supply on an urgent basis. Okay. This has never happened before, by the way.
Yeah.
So from that point of view, I think pharma could come back. Pharma is under-owned, by the way.
Yes.
The promoter holding most pharma companies is reasonably high. So the price impact of incremental buying could be a lot higher. Number two, it's a very, very small percentage of most portfolios. Most people have viewed it as a trading call rather than as an investment call. Cash flows are decent. Leverage is very limited in most cases. And some of the pharma companies, one or two of them are getting into the PLI space, which means actually start manufacturing critical inputs and intermediates instead of depending on China, with concessions coming from the government, which essentially not only strengthens and secures their input pipeline and their end-to-end, if you will, but also makes us as a country more dependent on ourselves rather than outside world. Yeah. So the PLI-based generics, these are the spaces to watch out for.
Now, India's largest tech services giant TCS is set to report its earnings for the second quarter tomorrow. The IT firm is likely to report a muted quarter second, that despite having made big deal wins. Tushar Deep Singh joins in with the details.
Net profit of TCS is likely to have risen in the July-September quarter amid flattish revenue growth. Here are 5 things to watch out for. According to Bloomberg, TCS is likely to clock a revenue of rupees 60,353 crore compared to 59,381 crore in the first quarter. Net profit is expected to rise 3% sequentially to 11,409 crore. Clearly, the quarter was subdued. What we need to watch out for is the commentary for the rest of the fiscal. TCS signed some mega deals in the July-September quarter. $1 billion from JLR, $1.1 billion from UK's Nest. The order book for Q2 is estimated at $11 to $13 billion. But are the discretionary deals coming in? Are deals meaningfully converting to revenue? TCS, which is India's biggest private employer, wants all employees to return to office immediately, marking an end to work from home. While that could aid utilization levels, overhead costs will also go up. In the first quarter, TCS had a net headcount addition of 523 people, while its peers Infosys, HCL Tech, Wipro recorded a decline. TCS is unlikely to step up hiring now, but will look to make the most of its bench strength. The TCS board will also consider a buyback, its fifth in 6 years, which can be potentially its biggest ever. Last time, in March 2022, the company had repurchased shares worth rupees 18,000 crore. This time, it can easily go up to rupees 20,000 crore.
And realty stocks were among the most sought after in trade today. The Nifty Realty Index hit a new high amid robust sales in growth. Analysts maintain their bullish stance on the sector, expecting the sales momentum to continue. Saloni Kothari joins in with more details.
The Nifty Realty Index surged to its highest in 15 years, being the top gainer today. This sharp rally was on the back of positive operational updates from multiple companies for the second quarter of FY24. The gains were led by multiple players, with a few hitting 52-week highs on reporting highest ever quarterly sales numbers. One of the stocks that stood out in trade today was Prestige Estates, which rose more than 10%. The company reported its highest ever sales of over Rs 11,000 crore during the first half of FY24. Its quarterly sales also more than doubled to over Rs 7,000 crore. Shobha also added to the list of gainers in the realty pack. The stock witnessed a jump of over 6%. Other property stocks such as Godrej Properties, DLF, Oberoi Realty also jumped significantly on healthy business updates. The Realty Index remains to be among the top performing indexes this year as analysts remain bullish on the sector. They expect the sales momentum to continue for the major developers, and not just only for this year but also for the next 2 to 3 years. There are also expectations of improvement to be seen in pre-sales numbers across the key players. The industry data also seems to suggest that the momentum in sales and launches have been healthy, which is leading to a strong guidance by the companies.
And Ajmera Realty ascends to new highs. Post a robust growth in sales, the stock hit a 52-week high in trade today. BQ Prime spoke to Director Dhaval Ajmera on the growing realty market and the sectoral outlook. Listen in.
Things have been really buoyant. People are looking at buying apartments and residential or real estate assets in all classes today. We are also seeing that this festive season is looking to be promising, and my guess is that the projects which are under construction, or probably if any new launches come across, not only us but any developer will see a good sustained movement coming in. Secondly, if you look at the IGR reports which come in, at least if I have to look at Mumbai perspective per se, there has been consistently good numbers which have been throwing up in the last few months. My guess is this would sustainably continue over the next few months as well. Secondly, as far as pricing are concerned, the biggest thing is, at least what I see is, not many developers have actually increased the price looking at the trend. Obviously, primarily the prices have been just right. People prefer to, buy at a price which is, right at the market and not really overpriced. And that's what many developers have continued to do so. And that is why we are seeing this movement and the trend happening. So I think till the time, developers have realized that, it is best to, have a sustained movement rather than increasing the price. And that's what the trend has been going, and it will be a win-win for buyer and the developer both.
And some good news coming in for India. Now, the IMF has hiked India's growth forecast to 6.3% in the financial year 2024. This comes on the back of higher consumption, even as the global economy is estimated to slow down. Pragati Oberoi joins in now with more details.
The IMF has published its World Economic Outlook for October, which gives us a sense of what shape the world economy is in and what the future holds for it. Here's a quick overview of what the report says. The IMF has raised India's growth forecast to 6.3% in FY24, mainly due to higher consumption. It expects India to maintain this level even in FY25. The global growth, however, is expected to slow down, with a baseline forecast at 3% in 2023 and 2.9% in 2024. Even the advanced economies are expected to slow to 1.5% in 2023 and 1.4% in next year. Policy tightening is expected to be the major reason for this. As far as inflation is concerned, the global forecast is expected to fall steadily to 6.9% in 2023 and 5.8% in 2024. But the IMF believes that in most cases, inflation is not expected to come back to the target until 2025. Lastly, the report has cautioned that climate and geopolitical shocks can cause food and energy prices to spike. And here, the China's real estate crisis are definitely an element of caution.
Well, it's time for a short break. On the other side, more news and updates.